Dear Governor, distinguished guests, dear colleagues, ladies and gentlemen, good morning. My name is Marco Francini. I'm the head of the EIB Group Office for the Baltic State. I would like to welcome you on behalf of the European Investment Bank, the central banks of Estonia, Latvia, and Lithuania to the event called Invest in the Baltics from Pandemic to War. Before we start, allow me to thank all the staff in the central bank in Tallinn, Riga, and in Vilnius for the excellent cooperation in the organization of this event. We will start with opening remarks by Mr. Gediminas Šimkus, Governor of the Central Bank of Lithuania, followed by Mr. Tomas Estrus, Vice President of the European Investment Bank. We will also have a presentation of the EIB Investment Survey and two very interesting panels. Without further ado, may I ask Ms. Gediminas Šimkus to give his opening remarks. Thank you.
Good morning, dear Vice President Estrus, Governor Muller, Governor Kazaks, dear colleagues and webinar viewers, and a warm welcome to this joint webinar organized by the Bank of Lithuania, Bank of Estonia, Bank of Latvia, and of course the European Investment Bank. And I'm very grateful for the EIB for approaching with this excellent idea of this event. We are living in extraordinary times. Just as the pandemic pressures have started to ease, we got hit by another huge shock, a war against Ukraine. And let me stress that we stand in full solidarity with Ukraine and Ukrainian people. To date, Lithuania welcomed more than 50,000 Ukrainian refugees and is the third largest donor of bilateral aid to Ukraine in percentages of the GDP. While we hope for a swift end to this unjustified war, currently the risks that the war in Ukraine escalates still remain very high. And we are experiencing unprecedented degree of uncertainty. This is very worrying, as numerous surveys and reports show that uncertainty is the largest barrier for private corporate investment. Fortunately, policymakers can address this, at least to some extent. And as we witnessed in the months following the outbreak of the COVID-19 pandemic, high quality and well-targeted public investment in times of high uncertainty enhances output. It also crowds in private investments rather than crowding it out. The COVID-19 pandemic offered an opportunity for companies to become more digital. Demand for electronic services rapidly increased, creating perfect conditions for expansion of electronic payment service providers. Growth in electronic payments created value in Lithuanian financial sector, and for instance, one of the Lithuanian payment startups recently attracted an impressive $65 million Series A funding. Growing fintech sector also contributes towards solving structural problems that we have here in the country, the concentration of the Lithuanian financial sector. And at the same time, business funding through crowdfunding platforms also gain traction. As pointed out in the investment survey of European Investment Bank that will be presented here shortly, total investment in Lithuania rose by 5% above the pre-pandemic level by the end of 2021. And similar patterns were observed in Latvia, while in Estonia, investment in 2021 stood at staggering 30 to 40% above the pre-pandemic levels. Increased investment and recovering consumption ensured that the Baltic economies recovered swiftly from the pandemic shock, with GDP growth in 2021 already outperforming most of the previous forecasts. Despite the pandemics, before the Russian invasion into Ukraine, Lithuania was on the path of growth and the long-term economic transformation of digitalization and sustainability. In these unprecedented times, we must stay on this path. No matter the current uncertainty, we need to ensure investment directed towards our long-term goals continue. A consistent and speedy implementation of the RRF plans geared towards the climate and digital transition remains crucial. War against Ukraine highlighted the importance of energy independence. Investing into developing renewable energy sources not only reduces geopolitical energy vulnerability, large-scale and ambitious green investment programs also help offset the negative effects of automation, loss of jobs, and growing regional inequalities. Cheaper and more available green energy also contributes towards meeting our CO2 emission targets. Despite this opportunity, appearing in such a tragic circumstances of war, the policymakers cannot afford to miss the move away from fossil fuels by directing public funds that are available towards expanding renewable sector. Public investment will provide a spark, but we need a financial system that is financing climate-friendly investment to keep the engine running. Fostering such a sustainability-minded financial system is an increasingly important topic, but this is a topic already for us, the central bankers. One of the strategic goals of the Bank of Lithuania is management of the climate-related risks. We monitor our own institutional carbon footprint and manage our own investment portfolio according to the sustainable investment principles. We also established a new Center for Financial Market Development just before the outbreak of this war and are preparing to open a Center for Green Finance in hopes of increasing opportunities to attract resources for Lithuanian companies considering green investments. To this end, we call for a closer cooperation among the Baltic peers in developing our capital markets, and I believe that Baltic states currently fail to exploit the image of being one region, being one strong region, and establishing a truly pan-Baltic capital market would not only foster the innovation, but would also put the Baltic companies on the map for global investors. Dear colleagues, to conclude, as the well-known saying goes, good times don't last, and bad times don't stay forever. Planning and investing today in preparation for those good times to come is more important than ever. It's therefore a great honor to open this Investment in the Baltics conference in webinar format, still in webinar format, and I look forward to the upcoming discussions and presentations. Many thanks.
Dear Governor, thank you very much for your speech. May I now ask Mr. Thomas Estrus, Vice President of the European Investment Bank, to take his speech. Thomas, the floor is yours. Thank you.
Thank you very much. Dear Chairman Simkus, dear Governor Müller, dear Governor Kazaks, ladies and gentlemen, friends, we are honored to have this webinar for the Baltic region today in Vilnius, hosted jointly by the Bank of Lithuania, the Bank of Estonia, and Bank of Latvia, and the European Investment Bank, EIB. It is the first time we have come together to hold a regional event, and we are very pleased to present the findings of the EIB Investment Survey and our annual investment report. I want to thank all three of our co-hosts for their excellent collaboration and the commitment to steer an insightful debate on investment in the Baltic region. And I hope we will continue this discussion throughout the year and the coming years. We come together in a period of great sadness and concern, but also great determination in Europe. We have a Russian aggression and invasion of Ukraine, a major conflict on our own soil. The EIB has been active in Ukraine since 2007, and all our friends, family, colleagues and partners from Ukraine are in our minds. We will stand in solidarity with the Ukrainian people, reaffirming our commitment to support an independent Ukraine and restore the lives of its people. The European Union and its partners have swiftly imposed unprecedented sanctions on Russia and demonstrated great solidarity with Ukraine. Member states have welcomed millions of refugees in search for safety. European institutions play a key role in this joint response, and financial support is an essential component. Initial disbursement worth 668 million euro have already been made by the EIB and under our Ukraine solidarity package to help to meet the most urgent financial needs. And I'm very grateful to our shareholders, the 27 member states of the European Union, that swiftly came together in our board already a week after the war broke out to make this support possible and disbursement very quickly. Much more is needed going forward. The EIB is now pursuing further initiatives for an additional up to 1.5 billion euros by repurposing infrastructure project commitments. We aim to help Ukraine to meet its immediate investment and reconstruction needs in transport, energy, urban development, and digital investments. We will also finance new critical social infrastructure, banking on our experience with the Ukraine Early Recovery Program. This program started after the previous Russian aggression of 2014 and supported the reconstruction of hundreds of social projects, hospitals, schools, kindergartens, and social housing. And the cost, of course, of rebuilding Ukraine is almost impossible to estimate the sums at this time, but there is a need for very, very strong solidarity, not least from us in Europe. While the impact of the war is, of course, most acute in Ukraine, it is also extending to neighboring countries, as almost 6 million refugees have fled its borders, mainly to Poland, Romania, Moldavia, Hungary, Slovakia, but also to Germany and other Western European countries. Also, the Baltics have been very generous in receiving refugees fleeing from the war. The EIB has therefore announced an additional 4 billion euro program to help European Union cities and regions to meet the challenges of welcoming and integrating the war refugees in 2022 and 2023. The financial support will be complemented by advisory services to permit effective deployment of the funds. Turning back to the issue of investments in our own economies, we at the EIB feel that this is a much needed discussion. EU economies are moving out of the unprecedented shock that the pandemic caused. We were transitioning into what we thought was a new normal, if that can be said in these current circumstances. And then the war hit the Ukrainian people, the surrounding countries, and the global economy. We still think that we can shape how a recovery in the economy will look like by focusing on investment. And how Europe, the Baltic region, and its firms are positioning themselves in this new environment, it obviously depends on investment. Speaking of which, the EIB has continued to support investment at an unprecedented scale during the pandemic. In 2021, the EIB Group ramped up its activities, providing a record of 95 billion euros in financing, up from 77 billion in 2020. The main reason for this great increase in our lending is our role in Europe's prompt and massive response to the pandemic. Almost half of the group's financing, about 45 billion euros, went to small and medium-sized enterprises, the SMEs that were so hard hit by the pandemic. In parallel, we are continuing our transformation into the climate bank of the European Union, with the target to reach 50% of our financing directly related to climate and environment by 2025. Already now, all our investments are Paris-aligned, and we estimate that 1 trillion euros of investment will be conducted thanks to EIB support by 2030. In parallel, we have also been working, of course, to see that each and every country has the support from EIB in this transition. The EIB remained active across the Baltic region in 2021. In Lithuania, around 450 million euros of financing worth 0.8% of GDP was provided, with support going to small businesses, the environment, and innovation. Estonian projects supported by the EIB group amounted to 348 million euros, worth 1.2% of GDP, with funding for small businesses and improving local and national infrastructure. Finally, in Latvia, 112 million euros of EIB group financing, 0.4% of GDP, went to national infrastructure projects, education and innovation. Coming back to our investment survey, we can see from its results that the policy response to the pandemic by governments in the EU countries, including the Baltic region, was targeted at firms that needed such support. This helped firms to preserve investment and meant that economies performed better than had been expected when the pandemic first hit. However, more challenges lies ahead, not least because of the effects of the war, but also the urgent need to support climate and digital transition. I'm convinced that the climate transition presents opportunities for Baltic firms. However, there is a degree of concern, with firms across all three countries more likely to see climate transition as a risk rather than an opportunity. And here we see some interesting differences among European Union member states. While roughly half of the large firms plans to invest in climate in the next 3 years, this percentage drops sharply for smaller firms, especially in Estonia and Latvia, showing that we have work to do to encourage and support firms in their climate transition. A key lesson from the COVID-19 crisis is that we need to avoid a protracted period of subdued investment, which would exacerbate investment gaps in a number of areas. After the global financial crisis, it took more than a decade to get investment in Europe back to where it had been. Following the pandemic, a robust policy response has helped us to rebound more quickly, but now we cannot afford to have other fractures reopening or deepening against the background of the war and the climate emergency unfolding. Let me finish by saying that we need joint efforts, and at the EIB we have demonstrated that creative financial instruments and complementarity between EU budget support and EIB financial tools can effectively unlock and catalyze investments, even against the background of very challenging external circumstances. Ladies and gentlemen, let me close here. I'm looking forward to the following presentations and discussions. Thank you for your attention.
Thank you very much. Now we will have our colleague Kevin Kerner, economist at the European Investment Bank, starting with the presentation of the EIB Investment Survey. Kevin, the floor is yours.
Thank you very much, Marco. I would now like to show you some key results of our EIB investment report and EIB 2021 survey for Estonia, Latvia and Lithuania, and also to put them into the context of the current geopolitical crisis caused by the war in Ukraine. The EIB investment report is issued annually by the Economics Department of the European Investment Bank, and it provides a comprehensive overview and analysis of investment and the financing of investment in the European Union. The focus on the 2021-2022 report is devoted to Europe's progress towards a digital and green future in the post-COVID-19 era. The report builds on a unique set of databases and survey data, including the annual EIB investment survey, avoiding the worst, while Baltic firms took the opportunity to transform. The effects on the war in Ukraine vary across countries and sectors, slow down the economy and increase corporate vulnerability. Investment, which is very much forward-looking and sensitive to uncertainty, is very exposed to that. And through their geographic location, the Baltic countries are particularly exposed. The challenge we are facing now is to adjust to this reality, to address the issue of security of energy supply, while at the same time stay on track with the green and digital transition. Very important there is the plan that was just presented by the Commission, Repower EU, just presented on Wednesday to save energy, diversify energy supplies, and speed up transition to renewable energies. This will add around 200 billion additional investment needed in order to secure energy supply and the required green transition, which is also very closely linked to the Recovery and Resilience Facility. Now, as I said before, the Baltics weathered the pandemic very well. This we can also see in these two charts, the left one showing the cumulative change in real GDP and the right one the cumulative change in real investment, both in the EU and the 3 Baltic states. What the charts show is that in all 3 Baltic states, GDP and investment declined less during the pandemic and recovered faster than the average of the EU. At the end of 2021, GDP in all 3 countries and the EU was above the pre-pandemic level of end 19. In all 3 Baltic countries, the investment component of GDP was above the pre-pandemic level, again in 2021, while it was still slightly below that for the EU as a whole. This strong performance in the Baltics is particularly remarkable when we compare it to the great financial crisis of 2008-2009 and the consecutive debt crisis. Back then, the Baltic region was heavily affected with a deep recession and strong decline in investment. This time around, it's entirely different. As we are gradually coming out of the pandemic, our concern now, of course, is the impact of the war in Ukraine, where the region is at the forefront. Before we have a closer look at the repercussions of the war in Ukraine, let me first look at some of the results of our survey regarding investment during the pandemic. What we can see on this slide is that the impact of the pandemic on investment was more benign than anticipated. This applies both to the EU as a whole as well as to the 3 Baltic countries. For all countries, the realized decline in investment of firms in 2020 was lower than previously expected. The full circle thereby on this slide shows the realized investment, the dotted ones, the previously expected investment. For 2021, we do not have the realized numbers yet. They will be in the next survey. But what we can see regarding the current situation already is that the war in Ukraine will certainly be felt strongly when it comes to investment. We just saw the release of the spring forecasts of the European Commission. Gross fixed capital formation is projected to decline in Estonia by 7% this year, compared to a projection of plus 2.5% in November last year. In Latvia, investment growth is projected to remain positive, but just so at 1.3%, compared to 4.9% in the previous projections. And for Lithuania, investment growth is projected now at 2.7%, compared to 5.8% in the previous projections. It was mentioned also in the opening remarks already how crucial public financial support was in the EU. I just mentioned that. Not only directly through public investment, but indirectly through support to the private sector and households as well. This was both on the national and the EU level. In fact, a large share of firms in all Baltic countries and the EU as a whole saw a drop in sales or turnover during the pandemic. This we can see on the left-hand side. The largest drop according to the survey was observed in Lithuania with 52% of firms, followed by 48% in Latvia, close to 49% for the EU as a whole. In Estonia, the number of firms reporting a drop in sales or turnover was somewhat more moderate at 40%. As we can see in the right chart, we observe a substantial share of firms in the EU as well in the region that received some kind of financial support. The numbers roughly correspond to the difference in the drop of sales and turnover in the EU and the region. Around 59% of firms in Lithuania reported to have received financial support, compared to 49% in Latvia, 39% in Estonia, and 56% for the EU as a whole. When it comes to further specify the kind of support received, the main item reported was subsidies that were not paid back, followed by a deferral of payments. So when it comes to the impact of the war on the EU, policy support now once again remains crucial. When we asked firms in our survey whether they see a long-term impact of COVID-19, the answer is an overwhelming yes, as can be seen in this chart. A clear majority of firms sees a lasting impact on the pandemic, 75% in Estonia, 78% in Latvia, and 85% in Lithuania. This compares to 72% for the EU as a whole. When asked about the specific areas that are impacted by the pandemic, the clearest result was provided for an increased use of digital technologies. At the same time, and also a very positive note, only a minority of firms, around 17% in Estonia to 19% in Latvia, see a permanent reduction in employment as a consequence of the pandemic. And this is broadly in line with the EU as a whole. There was around 13%. The pandemic clearly has been a tragedy when we look at the losses in life, hardship of many firms and households. But these results suggest that it was also an opportunity used for transformation, in particular when it comes to the digital transition. This was already a pressing issue before the pandemic, and the crisis seems to have given a push in the right direction. This brings me to my next slide, where we see the spring economic projections of the Euro Commission for real GDP growth. Before the Russian attack on Ukraine, the outlook for the EU economy was one of prolonged and robust growth. Over the last 3 months, this has changed dramatically. The surge in commodity prices contributed to previously rising price pressures, and rapidly rising uncertainty added to vulnerabilities that already existed before the war. The Commission accordingly cut its growth forecast for the EU as a whole by 1.3 percentage points for 2020 to 2.7%, and by 0.5 percentage points to 2.3% in 2023, compared to the winter 22 forecasts. For the 3 Baltic countries, being particularly exposed to trade links, geographic proximity, and the energy channel, the outlook for 2020 was cut even more strongly, by 2.4 percentage points to 2% in Latvia, 2.1 percentage points to 1% in Estonia, and by 1.7 percentage points to 1.7% in Lithuania. That being said, the channel of transmission of this crisis are not equally strong for all 3 countries. What we see here is the impact of the crisis on, the expected impact of the crisis on inflation. What we see here is the update of the Commission forecast for inflation, and also the comparison again to the winter 2022 projections. Inflation for the EU is expected in 2022 to increase to 6.8% for the EU as a whole. This is 2.9 percentage points higher than in the previous projections. For the Baltics, the increase in inflation projections has been even stronger, to 12.5% this year in Lithuania, 11.2% in Estonia, and 9.4% in Latvia. Now we see vulnerabilities across countries with respect to the war in Ukraine. The Commission also just published a vulnerability matrix based on energy exposure, trade and value chains, as well as asset exposure, with results broadly in line with a similar exercise conducted by the EIB Economics Department. The Baltics are here shown among the most exposed countries when it comes to energy, trade, and value chains. The strong rise in uncertainty can be seen in financial markets as well, with, for example, sovereign CDS spreads surging sharply for countries in the region after the Russian attack on Ukraine in February, including Poland, Latvia, Lithuania, and Finland. The sharp rise in the commodity prices due to the war in Ukraine puts pressure on the corporate sector as well as households, and this we can also see on this slide. EIB colleagues estimated the increase in the share of firms reporting losses based on the energy and trade channel. That we can see on the left-hand side. For selected countries, we see here an increase of the losses reported either due to energy or export. Lithuania is among the countries that appear most affected here, with an increase of around 18 percentage points, mainly due to the trade channel. Latvia also sees an increase of around 10 percentage points, Estonia of around 7 percentage points. And this is also in line with the differences of trade exposure of these countries to Russia. On the right side, we see estimates of EIB colleagues on how the increase in commodity prices affects the risk of poverty in selected countries. We can see that for the 3 Baltic countries, that the increase in the share of the population at risk of poverty at around 3 percentage points is among the highest in the EU. And these numbers underline the broad economic and societal impact of the war. Now, therefore, at this point, I would like to repeat once again how this new changed reality requires us to quickly adapt with investments to reap the benefits of the green and digital transition. But at the same time, now we also, more urgently than ever, need to address the issue of security of energy supply. A policy focus on investment is crucial also with a view to future competitiveness of the EU and its members. And that brings me to my next slide. Here I show against the manifold headwinds and challenges we are currently facing, bolstering the economic framework and addressing structural bottlenecks that hamper the long-term growth prospects is more important than ever. Here I would like to show some indicators of the EIB 2021 investment survey that are closely linked to competitiveness. The left chart shows the share of firms that invested in innovation in 2020 in the EU and the Baltics. We also included here the US for comparison. In the EU as a whole, only 36% of firms invested in innovation, either new to the world, the country, or the company. This compares to 44% in the US. In the Baltics, 48% of Estonian firms said that they invested in any kind of innovation, compared to only 30% in Latvia and 33% in Lithuania. The chart on the right-hand side shows the share of total investment allocated to selected investment areas that are also considered closely linked to competitiveness. Training of employees, IT and research and development. We see that particularly when it comes to our R&D, but also training of employees, there seems to be catch-up potential for the Baltics. In the Baltics, we have 5% of total investment allocated to R&D. In Estonia, 4% in Latvia and Lithuania. And this compares to 8% for the EU as a whole and 7% for the US. Many firms reacted to the pandemic, starting their digitalization journey. We asked companies how they reacted to the pandemic in terms of digital adoption, and 36 to 37% of companies in Baltics said that they became more digital during the pandemic, compared to 46% in the EU as a whole. 56% to 68% of companies said that they implemented advanced digital technologies, compared to 61% for the EU as a whole. On the right-hand side, we see a combination of firms' current implementation of advanced digital technologies and the action they took to become more digital as a response to COVID-19. The gray bars here in this chart depict the share of firms as a share of employment and a share of employment in firms which did not react at all with technical adaptation to the pandemic. What we can see here is that a clear majority of firms reacted to the pandemic. However, except for Estonia with 24%, the share of firms which did not adjust to digitization was higher than the EU average of 26%, with 31% in Latvia and 36% in Lithuania. The numbers are also similar for the share of employment. On this side, I would like to have a look at the green transition and investment measures to address climate change. First, we have a look at the impact of climate change on firms in the region, or what we call physical risk. This is shown on the right-hand side. In all three Baltic states, a majority of firms feels the effects of weather events. 56% of firms in Estonia, 53% in Latvia, and 65% in Lithuania believe that climate change and the related changes in weather patterns are currently having an impact on their business. This is in line with the EU average of 58%. At the same time, more firms in all three Baltic countries see the green transition as a risk rather than an opportunity. This is shown on the left-hand side. In Estonia, 35% see the green transition as risk versus 21% as an opportunity. In Latvia, it is 30% versus 16%. And in Lithuania, 47% versus 20%. Remarkably, this is quite different from the EU as a whole, where slightly more firms, 31%, see the positive aspects of the green transition compared to 28% for the risk overweight. However, there is also a significant gap in all Baltic countries between large firms and SMEs, which is not shown on this slide. This brings me to the second slide on climate change, which looks into green investment. On the left-hand side of this slide, we see share of firms that reported to invest in measures to improve energy efficiency. The bars are the results from the 2021 survey, and the horizontal rectangles show the 2021 survey results. What we see immediately is that the share of firms investing in energy efficiency decreased both in the Baltics and the EU as a whole, which might reflect a refocusing of investment during the pandemic. We also see that for only one of the three Baltic countries, Estonia, The share of firms that invest in energy efficiency at 41% is in line and even exceeds the EU average of 37%. In Latvia and Lithuania, the share is below the average at 30 and 23%. When it comes to investment plans to address the impact of climate change, the picture is a bit different, as we can see on the right-hand side. In Lithuania, 49% of firms have already invested to deal with climate change, while 52% have plans to invest more in the next 3 years. The share of firms who have already invested has increased since IBIS 2020. It exceeds the EU average of 43% from previous 47% for planned investment. Estonia and Latvia are below the EU average here. So also from that perspective, it is very important to use the opportunity to front-load green investment, also in response to the current energy crisis and in the framework of the announced Repower EU plan. This brings us to the question of obstacles and barriers to investment in the EU and in the region. Already before the pandemic, availability of skilled staff and uncertainty about the future were repeatedly the most cited long-term barriers to investment in the Baltics as well as in the EU. Uncertainty about the future is, with 94%, the most quoted barrier to investment in Latvia, and with 83% the most quoted in Lithuania. With 66%, it is the second largest barrier in Estonia. Lack of skilled staff is the most quoted barrier to investment in Estonia, and with 91% and 80%, the second largest barrier in Latvia and Lithuania. Also EU-wide, these are the two most quoted obstacles, but as we can see in the charts, they are considered an issue by more firms in Latvia and Lithuania. Other obstacles have been quoted as well, such as demand for products, energy costs, availability of finance and labor market regulations, but these appear to be the most pressing issues. The issue of skilled staff is strongly related to the demographics in the Baltics, as well as their structural implications. And their structural implications have been well understood by policymakers and are being addressed, among others, under the RRF, including through measures. And the issue of uncertainty has become even more pressing in the current situation when we look at the war at Ukraine. So it will be interesting to see how this might reflect in our next survey results. So this brings me to the end of my presentation. Just to summarize, the region showed impressive resilience to the pandemic and used the crisis also as an opportunity for transformation. We have seen that there is still some catch-up potential for the green transition, and when it comes to innovation, research, and also partly still digitalization. In order to counteract the heightened uncertainty and economic impact of the war in Ukraine that weighs on the economic outlook, it is crucial to maintain policy support in a growth-friendly economic environment, including necessary structural transformations. Thank you very much for your attention, and I'm very much looking forward to the rest of our conference.
Thank you very much, Kevin. So now we will start with the first panel discussion. I would like to welcome on stage Ms. Deborah Revoltella, Director of the Economics Department, European Bank, and Mr. Gediminas Šimkus, Governor of the Central Bank of Lithuania. The Governor of the Central Bank of Estonia and Latvia will connect virtually. So I would like to welcome also Mr. Madis Müller and Mr. Martins Kazaks.
Good morning to everybody, and it's really a pleasure to have an opportunity to chair this panel. I'm Deborah Revoltella, and I'm the Chief Economist of the European Investment Bank. And it's It's really an honor to discuss about the economic situation in the 3 Baltic countries with the 3 governors of the central bank. So I think we really have the chance to learn the challenge, the driver of the resilience that we have seen in the last years in the economy, and go deep into the key economic aspects. And I would like to start the discussion really looking at what we have seen in the last few years. We have seen in the region a resilience to the pandemic that has been quite good, I would say, in the 3 economies. It's definitely different from what we have seen during the global financial crisis. We have seen that the economic shock has been quite limited, the rebound has been quite strong. And however, we also see the new challenge coming up. So the war, the very strong potential negative effect on the economy, the dependency related to issues related to energy security, related to trade dependencies, the concern in terms of the very strong effect on prices related to the war, and then the concern in terms of inflation. And I think talking about inflation is something that governors are used much more than in the last year, at least the pressure on the upside. With this, I think we have some 40-minute discussion. I would like to start with Governor Müller, and just asking, looking back at the past, so looking at the pandemic, something that used to be at the center of all discussion and now seems to be like the problem of the past. But how do you explain the resilience of the economy to the pandemic, the capacity to rebound? What were the drivers and the successes in the policy response?
Thank you for the question, Deborah. And first of all, I'm really happy to be here, part of this discussion. I think it is important, especially in these uncertain times, to think what we can do to maintain and improve our investment climate and competitiveness. And the EIB's studies always provide a very useful context for those discussions. But in terms of the resilience of, now speaking of, in my case, the Estonian economy, I think in the case of the COVID crisis, we did, of course, suffer quite a bit. Perhaps it was less than some other European countries, also because at least the initial wave of the pandemic, in terms of the number of infections, it wasn't that significant. Plus, we were perhaps lucky that, for example, the tourism sector that was and really still is the most affected one was less significant for Estonian economy as a whole. But in terms of the policy support, I think the approach that the government took was quite appropriate. Of course, we used fiscal policy to support the firms and households that were most suffering. It was important to try to mitigate the impact on the labor market, so that not too many people would be laid off from their job. But at the same time, I think it was important to find a good balance, so that it would still be possible for the necessary structural shifts in the economy to take place, and people to find new jobs in industries that are better placed for the rebound. So I think that sort of worked well in our case. And speaking of, as a central banker, we also should mention the monetary policy, which I think really was helpful in that sense, that we did manage to maintain favorable lending conditions both for firms, households, but also the government, of course, was able to borrow at the favorable rate. And this is something that's very different from example when we compared to the situation during the global financial crisis. Maybe that's a very brief summary.
So thank you very much. And Governor Kazaks, what's the assessment of the recovery from the pandemic that you have for the Latvian case?
Already were mentioned by Madis with respect to the Estonian economy. They also apply to the Latvian one, but let me kind of take a step a bit back, and this is really a kind of story of two different crises. And I think the key reasons are the structural differences in the economies and also the policy response. And it's not only with respect to the Baltics, and I'll get back to the Baltics just in a minute. It's also very different if one takes a look at the global financial crisis period and also the COVID crisis. It was also very different in Europe. The policy response was very different. It was very quick and it was very effective. And the important point to mention here is that it was working in unison, both monetary policy and fiscal policy. And I think that was also one of the major factors why not only the Baltic economies, but European economy overall has recovered from the COVID pandemic so quickly. Also, in terms of policy making, I think it helped to some extent that it was a common shock. So everybody had by and large the same shock, everybody faced the same uncertainty, everybody had no vaccine at the very beginning. So it was very common and very similar shock in terms of the hit to the economy. But what we of course see now, when the recovery starts, then one sees the differences in fundamentals, in structural setup of the economies and all the relevant issues that help to recover quicker or delays the recovery. So in terms of monetary policy, I think ECB did a fantastic job during the pandemic. And also, even if it was coming somewhat later, national fiscal policies also were chipping in. And also we saw, I think, very important forward-looking development in terms of RRF. So more funding for joint fiscal and structural needs over the Euro area and European economy overall. Coming back to the Baltics, I would say again kind of two major differences why we were able to recover so quickly. One is that we entered the crisis, the pandemic, without major macro imbalances. It was not the case in 2008 and 2009. So that helped. Another thing is as well, and I would very much stress this, being part of the Euro area. Being part of the Euro area meant that we were shielded from the turmoil in financial markets. We remember the very early months of pandemic when close to 80 countries were asking for funding from the IMF. We were not part of that group. And one of the reasons was not only being more solid structurally, but also being part of the Euro area, being able to access the financial markets when it was necessary. And that's why the fiscal support, very broad fiscal support, at some point I would even say perhaps too generous fiscal support, but it was still possible and it was available and it was supporting both a recovery from the crisis, but also some structural improvements. I think these are the major factors helping us to recover from the crisis very quickly.
Thank you very much. And Governor Simkus, do you want to?
Yeah, it's pretty hard now to add on top what Governor Müller and Governor Kazaks has said, but still I have one point. I think it's not only about monetary and fiscal policies acting in unison, but it's also about the financial system and the macroprudential policy that is in the, so to say, central banking hands, at least central bankers' hand, at least in this region. So what was different that we entered this COVID-19 pandemic crisis having much stronger very well capitalized, efficient, with high liquidity buffers, the financial system, and this helped a lot. Also, the macroprudential policies, and especially prudent lending and borrowing regulation, created the situation where at least households had the sufficient buffers to accommodate a certain type of a shock or certain size of the shock. And another difference is that financial system, differently than in the global financial crisis, it didn't act that much in unison with the cycle. We have not seen much of the deleveraging. Oppositely, financial system provided credit, of course, in some cases with the state support, but as the finances the blood of the economy, so the economy has not lost the blood, and I think this is another dimension or another layer on what has been said very rightly by the governors of Latvia and Estonia.
Okay. No, and then moving to the next stage, I think we titled the conference from pandemic to war. That looks really brings forward the challenge that we see in front. And actually, we start from this assessment, so looking at the pandemic and the capacity to react, also based on a very strong policy support. And then we have a new challenge coming on the economy, and I think the countries shows capacity to adapt, showed capacity to react, but it's another huge shock coming up. What's the margin of maneuver that you see both on the fiscal and monetary policy point of view in this case, in this new phase, and do you see that? Do you see again this capacity to support the economy and to react to the new shock? And maybe Governor Kazacs, we can start from you.
Thanks. I just want to come back a bit to what Gediminas just mentioned in terms of the financial system, or the banking system, which is the major lender in the Baltic economies. And he was absolutely right pointing out that this time, during the COVID, financial system was part of the solution rather than source of the problem. And that is a very critical difference. And that also, taking a look at your question, what should we expect in the future? I think the strength, resilience, and good capitalization of the financial sector, of the banking industry, predominantly because that is the major lender in our economies. At least for the part of Latvia, I would love to see much more activity there. We've seen that in the past years, investments have been quite weak, and that also shows up in your analysis of the Latvian economy in the report. I would love to see much more investment activity. I would love to see much more lending activity, both companies willing to invest, but also financial sector understanding the risks and being, I would say, more brave, because being part of the euro area is a massive difference in terms of vulnerabilities compared to the times when we were outside the euro area. So I think this investment story and strength of financial sector and willingness to take on risk and lend more is critical for growth going forward. As to the other policies in this juncture, I think there are very important differences. And the major one from monetary policy point of view is that this time we have the problem of very high inflation. So in terms of monetary policy, the monetary policy will not be able to do the heavy lifting this time to support the economy. I think this is going to be fiscal policy and structural policy. Monetary policy, and I hope we will do the first step in terms of raising the rates already in July. Monetary policy has to take care of secondary effects of inflation because the primary effects are outside the scope of the monetary policy. So we need to raise rates, in my view, to limit the period of high inflation so that it is as short as possible and creates less damage to the economy. Okay? So monetary policy will still be supportive because the rates are still very low, but it's going to be increasingly less supportive to deal with inflationary problems. So most of the heavy lifting falls onto the fiscal policy, which unfortunately in many cases, not in the case of the Baltics, but in many cases of other major economies in Europe, is impaired or limited by the size of debt. The debt has increased. And that's across the board. It's both sovereigns, it's households, in many cases also corporates. So the heaviest lifting, in my view, needs to be done by structural policies. So we are back to exactly the same issue that we've been in the past. Structural policies, the ones that define productivity growth, the ones that define long-term growth, our ability to tackle climate change, to set up new supply routes, new supply chains, and be part of those supply chains. I think that is the most critical element that will drive our economies in the next decade. Thank you.
Thank you very much. And Governor Simkus, your assessment is also...
So let me begin with what Churchill once said. So never let a good crisis go to waste. And I think, you know, one crisis is following another, but every crisis also creates opportunities. And Martins mentioned structural reforms, but I think what those two crises, COVID-19 pandemic and the Russian war against Ukraine, showed that it forced us to move stronger into very concrete directions of the structural reform. So COVID-19 revealed the importance of the digitalization. It became not only nice sounding words, but it's like a real move towards that direction. What the last, so to say, crisis of this unjustified war reveals, this is the importance to decrease the energy dependence, in a way to move businesses and economies towards the greening economy, especially here in Europe, where we do have a high dependence of the energy, especially from Russia. So I think it's not only about the state support as in the COVID-19 pandemics, but it's also about how to use these funds coming from the state or from the European Union in various forms of financing to move or to make the economy changing.
I think that's very important. Can I have a follow-up question for you? Is that the central banks, particularly the ECB, has been very much moving forward on the climate transition, greening the financial sector. According to you, what's the role of a central bank in this, and how much it's instead the public sector more on the fiscal side that should deal with the transition?
That's very good and an important question, because of course, you know, this, when we refer to the structural change of the economy, this is very much about on the fiscal authorities to, so to say, to force it, to implement and to foster change. But I think the central banks also should and could play their role. And it's not only about their own change. For instance, we do have a fight with climate change and sustainability in our strategic goals. And it's not only about procurement of processes, how we buy stuff or how we invest according to sustainability principles, etc., etc. But we as central banks, we we request, we enforce, and we implement, monitor, and supervise various prudential requirements. And through them, we can also, so to say, make a change in the financial system, or how the financial system should change, or how they should act from the perspective of the sustainability and greening impacts. And through this, we can play a pretty substantial role into the, so to say, into the change of the economy. Of course, this is a long way to go. Sometimes what someone will call green may seem brown for another. So taxonomy is crucial. But once we agree on this, I think we can really move on into the, also the central banks could play stronger and stronger role in this, so to say, structural change from greening perspective on the economy.
Thank you. And Governor Muller, if I can go back actually on the assessment of the policy mix that is necessary in this moment, what's your recipe for supporting the economy at this point in time with the risk associated to the war?
Yeah, thank you, Deborah. Well, first of all, you asked about how we're adapting and how the economy is doing now in this new situation, or the next crisis of which has to do with the economic impact of the Russian aggression and the invasion of Ukraine. Then I have to say that the firms so far seem to be in Estonia at least adapting relatively well. Although of course you have some specific sectors and firms that are more affected by trade with Russia or Ukraine or Belarus that has been cut off, and particular problems with some raw materials. But in terms of policy, first of all, I agree completely with what Martin said, that for us as central bankers, where we could use the tools of monetary policy to support the recovery of the economy during the COVID crisis, the situation now is completely different. So we indeed need to focus on the very high inflation, and I'm completely in line with everything that Martin said on that. But now coming to fiscal policy, which is an important second side of the policy mix, then here I again think that the situation is somewhat different. In case of the COVID crisis, as it hit us in 2020, it was, at least initially, to a large extent, a demand shock. So the government could support the firms and households with fiscal policy to maintain the level of demand and the economic activity. But now what we're facing, the situation is somewhat different. So first of all, in the Baltics in particular, we have very high inflation now, as we just also saw from the previous presentation. In Estonia, we now have the highest inflation level in the euro area. In April, it was close to 19%, which really is unprecedented. Well, it's been very long since we had such inflation levels, and Latvia and Lithuania, I think you're following shortly behind us. So we're not happy being the champions in that regard. But in terms of what the government can do, then of course, even as if we have those inflationary pressures that to a large extent still are due to the high energy prices and increases in other commodity prices and food prices, then we, at least in Estonia, we see increasingly that the inflation pressures are broad-based. The domestic economy has been doing so well that we need to be careful with adding further domestic demand, and that's a challenge also for the government, especially given that we need to now spend more on energy independence, as Gediminas referred to. We have the additional needs for defense spending. Of course, we need to make sure that we can provide necessary support to the Ukrainian war refugees, and that requires additional funding. And then there's a question for the politicians how to deal with the cost of living crisis and whom and how exactly to support, given that the very high heating bills and food costs, they certainly are a problem for people. And I think here we need to really be sure, and that has been the recommendation of Eesti Bank to our government, that we need to keep in mind that even if we still have room to borrow in the sense of the level of government debt, nevertheless we need to be careful and make sure that the support that the government provides to people is well limited in a sense that it's limited in time, but also well targeted to the households that need the support most. And we need to keep in mind that there is a risk that comes with spending too generously, in a sense that this could in turn create further inflationary pressures, and we don't really want to see that at this point of time. Thank you.
I think you make a very important point, because after coming out after the pandemic, the very strong support was actually allowing the economy to revamp so quickly. But on the other side, it creates a sort of a dependency on policy support. And on the one side, the concern is how resilient the economy is to a withdrawal at time of additional shock. But on the other side, you don't want to create a dependency on policy support in terms of economic activities. There is another point that I'm sure as governors must keep you quite busy, and it's going to inflation, but in particularly going to the labor market. In our survey, we have at the European level, but also in the 3 Baltic countries, we have that one of the major impediments for firms' investment is associated to lack of skills. And it tells something on the labor market. And I know that we have a very tight labor market in all the 3 countries. So what's the concern that you have, and how does this relate to inflation, and how much you see the inflation being tied to the tight labor market as well? And it tells us something on persistency of inflation. And maybe Governor Sinkus, we can start from you.
Thank you. I think this is a very important question, because eventually what all policies kind of aim to is to increase the living standards of people, right? What we saw after the global financial crisis, or how the labor market moved. So we saw that the unemployment decreased much more rapidly in big cities than in region, and it decreased much quicker in qualified labor force than in the unqualified. So we started seeing this structural change in the labor market that is very much relevant also in this current environment, because those who suffer first are unqualified people, typically living in the regions where there is much far fewer, so to say, labor places or possibilities to work. So this is one thing. Another thing is that it's not a big secret that in countries as ours, with quite a substantial shadow economy or gray economy, and many of those people, especially living in regions where they are not many people who seems, or the ones who are unemployed, in fact they do have a work, but they work, so to say, illegally. And just an anecdotal evidence. So if you want to have, so to say, someone that would help you to do some very simple tasks, it would be very hard to find one in region, because they are busy with something in the, so to say, shadow market. What I want to say by this, that even if we see some numbers of unemployment, I think I think that the labor market is even more tighter than it seems from the official figures, and this is very much reflected also by the substantial number of workers, especially before the Russian aggression into Ukraine. coming from third countries, Russia, Ukraine, Belarus. Of course, much lesser now of them now, but it's so the tightness of our labor market, and this is again very much reflected because we have now I would like to refer to the skills mismatch. I explained that we have high unemployment regions, high unemployment in the unqualified labor force, but it's also about we have a structural change of the economy moving to the high value added production. So we need qualified workers. So we have particular tensions in the particular segments of the labor force. And this, of course, is reflected in the fast growth of the wages and salaries. And this is again translated into inflation. And now it's, of course, the inflation is very much supply-side inflation. Monetary policy is ill-equipped to help a lot about it, so it's more on fiscal policies. But if I refer back to times before the Russian aggression against Ukraine, so the component that was growing fastest in inflation were service inflation, which is very much dependent on the salaries and wages. And again, it still plays a substantial role into the high numbers that were also referred by the Governor Mueller.
Okay. And Governor Kazaks, what would be?
Yes.
Yeah.
What's my take on this? I think the two-speed labor market problem, unfortunately, is very obvious also in the Latvian situation. So it's all about skills. Does it worry me? Yes, as a macroeconomist, even more so, because of course, if wages grow faster than productivity, that will at some point create problems. So that's again the issue of structural policies. Demographic situation is on downward trend in all the three Baltic countries by and large, less so in Estonia, okay, but populations are aging and shrinking. So it is with free labor force flows out of our countries towards other countries where income levels are higher, then again, this adds an extra layer of difficulty on this. So natural unemployment in the Latvian case, perhaps somewhere in the neighborhood of 7%, it's also extremely high. Okay? So this is again structural policies. So yes, the labor market at some point is likely to start creating problems for inflation. Okay? But at the current moment, the major drivers for inflation are still external. Okay? And labor market is an issue that one has to take care about going forward, monitoring what is happening there, given that monetary policy, of course, is for the whole of the euro area rather than specific countries. That's why national policies are increasingly important, both structural. In this case, I like very much what Gediminas has mentioned in terms of digitalization and energy and greening stories. This also is part of this growth going forward. But overall, this is not only about the government's intervention. Of course, governments are important here, but it's both about companies investing, about individuals investing in their own skills, so that these two-speed labor market problems are reduced. As to companies and this crisis, I would urge all companies, by all means in the Latvian case, look beyond the current crisis and invest. There's so much need for investment, both due to geopolitical reasons. Now we have, by and large, due to Russian invasion into Ukraine, we are next to the Iron Curtain. The good thing is that we are on the good part of the Iron Curtain. Okay, so our integration into the Western economies, into European economies, will get stronger, and we need to invest in that. There's new supply chains. There's also friendshoring stories, and that's lots of opportunities for us. It's not only the cost part; it's also the revenue part in the future. But it's also about climate transition, energy, renewables, and all this story. And it's beyond climate in many cases. And for the Baltic region as such, I think this is a win-win situation. Stronger Baltic region, be it all three Baltic countries, but I would also, in terms of energy, for instance, we very clearly see that integrating Finland and Poland closer, of course, is part of the solution. So there is no bridge anymore with Russia. Russia has blown it up. It was a very narrow bridge, but now, by and large, the bridge is gone. So it clearly pushes us towards the European economies and closer integration among ourselves. And the important thing that I want to stress is that there should be no kind of envy, because closer integration is beneficial to all of us. So it's a win-win situation. And in this case, one of the major drivers for growth in the future in the Latvian economy would be untapping stronger the potential of Riga, of the capital. Okay? And that closer integration with the other capitals in the Baltics would be helpful for all of us. So investments at the end of the day. Okay? It's what the corporates do. And I understand that's what's going to be discussed in the second part of this event.
No, thank you very much. And I think as the European Investment Bank, we like your message. And Governor Muller, can I have back back on the point on labor market, inflation, but also some consideration on investment as well?
Thank you, Deborah. We, of course, in Estonia, we share many of the situations also when it comes to the labor market. So similarly, in our case, the labor market has been very tight already. End of last year, for example, before the or beginning of this year, before the war in Ukraine broke out, if you were to ask the Estonian companies what is the main factor holding back their expansion, it was really labor market and shortage of skilled staff, and I think that's also what the previous presentation showed us. So the market is tight. The wage growth has been strong. We expect it to continue strongly, even if it's not quite at the level of the price increases right now. So we still have the problem of at least this year the real incomes of people declining. But nevertheless, I think we need to watch out for the risk of price wage spiral possibility in our case, even if that's not our sort of a base case scenario. We project the very high inflation gradually to come down the next year and even more so by 2024, whereas the wage growth would continue at around 6-7% per annum. So it is a tight market. We have the same structural problems with skill mismatches that also Gediminas and Martins referred to, but also relatively less skilled people. Recently, they really, I don't think, have any problems finding a job in Estonia. And then we also have these longer term issues that have to do with the aging of populations or long-term structural problems that, again, we share with the other Baltics and I think the rest of the European countries. Now, the new immediate problem is how do we find the possibilities for the Ukrainian refugees in Estonia who are not here only for a very short period, but some of them perhaps need to stay for longer, to also find employment for them and make sure that even if they don't speak the language, they find some employment opportunities. So this is the situation on the labor market, and I think indeed we share the characteristics in all three countries. But looking forward, I think speaking of investments more generally, again, Martin has said it almost, but I would also encourage the Baltic firms to look beyond the immediate crisis and also indeed invest in digitalization, the green transition. I think the presentation showed us that there is still some hesitancy among Baltic firms to do that, and I think we need to get over that. And also in light of this labor market outlook, where we have the problem of the declining labor force, we need to invest more in automatization, digitalization. So this is the key that will maintain the competitiveness of the Baltic firms going forward.
Okay. Thank you very much. And we are just finishing at the time that we were allocated for the panel. I think we had a brilliant discussion ranging from the recovery from the pandemic, the capacity of the economy to withstand the new shock, concern on labor market, inflation, but also final words very much on looking at the opportunities in the medium term and looking at how to adapt with the digital and the green transition, energy security, and the issue in terms of skills. So with a strong incentive to look at the opportunities coming and take, and again, take the crisis as an opportunity to transform. We have seen it happening during the pandemic. We have seen acceleration of digitalization, and I think it's really this could be the opportunity for accelerating in the energy security investment, but also in the green transition, combining the two principles. So on my side, thank you very much. It was a brilliant panel with a lot of insight, and we learn much more, and I think the message on investment is very much welcome. Thank you very much.
Mr. Revoltella, Mr. Shinkos, Mr. Kazak, Mr. Müller, thank you very much for an interesting discussion. I'm not going to announce now the coffee break. We will be back with you in 10 minutes with the start of the second panel. Thank you. Ladies and gentlemen, welcome back to the conference. We will now have the second panel discussion. The second panel discussion will be chaired by Ms. Valdone Dascuviene, Professor of Finance at the ISM. We will have online Ms. Sandrine Crozet, Director of Operation for the Baltic Sea and the Northern Region at the European Investment Bank. We have here Mr. Eligius Šivilis, General Director of Invest Lithuania, and we will also have virtually Mr. Karlis Danevečiks, Chief Risk Officer at SEB Bank, and Mr. Jonas Vanto, Director of Invest Estonia. Ms. Dascuviene, the floor is yours. Thank you very much.
Good morning. Hello, everybody here in the hall and also online. It's great to have your expertise in this panel discussion. And from the very start, I would like to turn to discussing the report that has just been presented. And what are your views on this report and the outcomes of the report? So in this fragile world, what does this report give to us? I would like to address the first question to Sandrine Crozet. What trends have you seen in lending and investments in the Baltics over the last couple of years? And how did the pandemic and now the war impact these trends? Elio, would you like to come up with this?
I think firstly the report that was presented very well reflects on what's happening actually in the Baltics, and I should admit that it has been some kind of big push for the companies when it comes to the digital transformation, but also complying with the strategies around the green transition. And the dynamic around the different countries and why would we have that differences when it comes to adaptation of the digital technologies or the labor shortage, as we saw, the skills are also different. I think that very much comes from the structure of economics we have and the way how business experiencing the current turbulent situation. Maybe I will not be able to comment on Latvia and Estonia, but then it comes to Lithuania, and I was also asking myself, why would Lithuanians not be that active when it comes to digitization as, for example, our neighbors? And to me, the first idea that came to my mind is, the fact that our largest sector is manufacturing. That's 20% of our GDP. And out of manufacturing, we have 80% of the exports that's been done in Lithuania. And interestingly, the exports keep on growing. And that means that the companies are actually, on one hand, have this uncertainty and turbulence, but on the other hand, they have quite a significant moment when it comes to actually scaling the operations, fulfilling more orders, delivering more goods, keeping with manufacturing. So in other words, they're living a good moment.
Thank you. Mr. Jonas Vanto, how would you reflect about this report, the insights for Estonia, and any insights on investors' behavior, their reaction to the war?
Thank you. Estonian side and the report actually reflected or mirrored really well the situation in the Baltics and in Estonia as well. And like Elius already pointed out, the lack of workforce, of course, is a challenge for everyone, and not only the Baltics or Estonia, but all the whole region of Europe as well. From the aggression of Russia towards Ukraine, then I believe that there was, of course, a lot of surprise emotions and like dust in the air as well for the investors as well. But as I just yesterday said in one of the other panels, that we're glad that the investors are with a stable mindset, so that the criteria of the risks of the location next to Russia is is only one of the things. If the like the opinions where should the new investments go, but from the agency side, from our agency side, the number of new leads has not decreased, and new investments continue to be in a high level as well. So of course, probably in the whole region statistics, there will be some decrease in the investments as well, but that's the investment agency's point and idea to talk to the investors, to understand the risks and then the fears from them, and of course answer them, because like our Minister of Economy and in IT said in the panel yesterday as well, that it's definitely not a bad time to invest to the region right now because of the security or the security reasons, definitely, because Finland and Sweden are making really fast steps to join NATO as well, and then the sea next to us is definitely will be like an inner bond of NATO. So it will be really difficult for Russia to do their like deeds or ideas here. So definitely investments will not stop anyway, and then the fears or risks will go down as well quite fast. Thank you.
To this, to your insights, the question related to the policy changes. You have been so active and also successful in attracting investments to Estonia. So do you foresee any policy changes in this respect? Any need to change the policy?
Well, the policies, as I started my ideas as well, is workforce, and of course attracting the talent from different countries, and not only from Europe, because we fight for the talent here anyways, but from other regions of the world as well. And the policy change, we just changed the policy for the law for foreigners, and we made it a little bit easier for companies to attract and to find workers from abroad. So I think this is the one of the biggest and helpful changes for the companies here.
I would like to address the next question to Mr. Danevich from SEB Bank, and to turn to the financial sector. What impacts did you see from the pandemic in the financial sector? And both from your clients and both from your business perspective. And now we are facing the war in Ukraine. How has this war changed the things?
Yeah, thank you. I'm very glad to be here. So to start a bit on a less serious note, maybe you can see in the background that there are very few colleagues from management board around. So we are even more digital than we were before. So Baltic economies were quite well prepared for pandemic shock, and in a way, sort of bank will never be the same again. And we can really see it from how clients interact with us and how we interact with the bank ourselves as employees. So the digital agenda is even more at the forefront. When it comes to other pandemic effects, I think it's well covered in report. One can see that Baltic countries, having suffered tremendously in previous financial crises, were very much prepared for this crisis. And I have had numerous discussions with International Monetary Fund, with our shareholders, with many other stakeholders that were throughout the years saying that seeing is believing. We sort of hear you that you're saying that Baltic countries and Baltic economies are not leveraged enough to be threatened by next crisis, but we need to sort of see how they perform in next crisis. So when COVID arrived, in a way for us that sort of see Baltic clients every day in credit committees, and I see them from all three countries, it was kind of connecting reality with what we expected, that this will be, from a financial perspective, a mild crisis, and this will not be an asset quality crisis, and that turned out to be a correct prediction. And frankly speaking, I think we are more concerned about events in Ukraine, about inflation currently, about energy prices that might have a more severe impact on asset quality. Whereas, for COVID, once again, Baltic economies, from a digital perspective, from leverage perspective, were very much prepared for that. And maybe one last sentence, Lithuanian economy was a bit commented upon, Estonian one as well. I would say if you look at Latvian economy, we seem to be still suffering from hangovers of previous crises. So the level of investment, the level of borrowing clearly differs from what you see in Estonia and Lithuania. And I can really every day see in the credit committees that ambition level from investors and companies in Estonia, in Lithuania, is on a higher level than in Latvia. So Latvia in some ways remains a country of unrealized potential, unfortunately.
Thank you. And I see that Ms. Sandrine Crozet has joined us on the panel. And now I have a possibility to ask you to reflect upon the report and upon the lending policies in the Baltics in the last couple of years, and also your outlook for the future.
Yes. So what we have seen during the pandemic at EIB was what has been also described by a number of the guests today. At first, let's say a shock, and then during some time, investment just got stalled. What was important to us, because of course we have also a counter-cyclical role, was to continue to support the society and of course the member states to be able to enable them to withstand the shocks. And the two pillars of our intervention were to support the economy and make sure that in particular the SMEs would continue benefit from lending. And this was done in two ways in the Baltics. We continued working with local banks and with national promotional banks to help them through their program, then to maintain funding. Also through the instrument of EGF, which was a guarantee instrument from which Lithuania benefited. And on the other side, of course, we try to support as much as possible public investment, and in particular in the health sector, by providing targeted support to help to face the additional cost of the system, for buying vaccines, for stepping up the health system, and also to continue investing in hospitals and in different capacities. This was, let's say, our crisis response, if you want. But of course, as you may know, we are also the climate bank. And during the crisis also, we continued working on that trend. And actually what we see now in the context of this new crisis, which is the war in Ukraine, that actually it was also important not to focus only on crisis response, but also to continue working on the main trends. And what we have done, despite somehow a slowdown in investments at the beginning, was to continue invest in networks, in renewables, in energy efficiency. And what we see now is that those topics become again very, very relevant, not only because they are good for the climate, which was of course our starting point, because our goal is to help the economy to transition to a net zero emission situation by 2050. But now it has also an additional strategic dimension, and actually not only a strategic, it has also an important impact on society, because, for example, a topic which was mentioned already several times today, with extremely rising energy costs, in particular in the Baltics, then you have now so a non-negligible portion of the population who is struggling to meet actually the energy bills. So in a nutshell, this is what we have been doing. Thank you.
Thank you very much. Really, climate change poses grand challenges for us, and obviously this is driving irreversible changes with cascading negative effects. Mr. Vanto, at Invest Lithuania, have you seen some increase in firms looking for investment in climate changes? Or have you seen some risks in this respect? And also I link this question to another one. Is there enough capacity to deliver increased investment activity?
Thank you. Still Invest Estonia, but we will meet with Elias quite soon as well. Maybe we can change some ideas. Maybe we can be more like each other as investment agencies. But jokes aside, of course, sustainability and climate change is one of the main topics in Estonia as well. This was one of the for me the questionable and it was like a surprise for me what came out of the survey that some of the companies or businesses see it as a risk. I haven't seen any company in our work who see it as a risk, only opportunities, and that's why we're working quite hard in increasing the amount of green electricity in our energy balance as well, and of course investing heavily in the emerging technologies, as for example hydrogen fuel cells or new generation batteries and so on. Some of the companies already through foreign direct investments have come to Estonia as well, and probably the interest will be there for years and years. The green turn definitely will be. It is already here, and it will be here even faster and bigger than we can't believe right now. So definitely, the focus is attracting sustainable and green tech foreign direct investments in the future as well, and then through that interest, I think the companies in Estonia will not see it as a risk. And of course opportunities, because of the value change will definitely be longer, and then the foreign companies and the Estonian companies will definitely find opportunities to cooperate with each other as well in the green turn.
Do you see more need for skills and training in this area, and how it can be provided? What is your opinion?
The question was
Thomas,
for me?
this is to Thomas, yes. Do you see more skills and training needed in this respect in the country, in Estonia in particular, or in the region in general?
Well, of course, all of the new technologies definitely need skills for it, and then the innovation which takes place. Of course, there are people who know the technology, and they need to share it for the companies, for the sector as well. So right now already universities and the bigger companies are making big steps towards that as well. That the knowledge and the skills and the know-how will be there for the green turn and green transition. So it will not happen without the knowledge. So I think all of the parts of the society need to make steps towards it.
Thank you. And I would like now to turn to the question of the changes in the economic landscape that were brought by supply chain disruptions. And one of the most cited impacts, both of the war and of the pandemic, are supply shortages and increased costs. So from what you have seen, how severe this has been in the Baltic countries? How bad?
Well, we have this saying in Lithuania that the big problem never walks alone. And of course, with pandemics, we have this big disruption in supply chains, but this is not the end, because now we have raw material price spike in addition to this. And I think this is a really painful mixture of several problems together, because if we take a look into our economic structure and also the value creation, we have to be honest that this region benefited in the past from having access to, so to speak, cheaper raw materials from the east, but now all of a sudden it's all closed and it's all over, and again establishing supplies from the new locations also to the scales that we need. It's a bit complicated, because you will have to enter the competition with other countries where you were not, so to speak, in the past. So now, for example, for the raw iron, all countries would, try jump into Turkey, trying to find new suppliers, but then us, smaller countries, we do not have this power of negotiation and power of scale so that we can ensure. So definitely this is a big topic when it comes to supply chains. However, on the other hand, if we take a look again into the explicitly Lithuanian economy, we have a transportation sector having a major share, which means that we have the capabilities, we have partners, we have companies, we have people who know how to redirect, how to transfer, how to move the goods. And I think us being situated in this location, it hasn't changed, it has changed one of our key value propositions, being at the crossroad between east and west, but now appeared that we are now isolated just to west or north or south.
Thank you. Lithuania has been very successful in managing the energy crisis, which also adds to the fighting with climate challenges. What type of policy approach, in addition, do we need from the government to accelerate the journey to decarbonization in terms of households, firms, and also R&D?
Yeah, well, this is a little bit out of my competence, but if I would share, just an opinion, I think that there are good and bad things. Good on the independence, and that's fantastic that Lithuania has been a role model when it comes to energy independence, and I think this is now can be easily replicated as this region's success, and hopefully, this will work out, especially with collaboration. On the other hand, if I would come back to this green transition conversation, at least in this country, it looks a little bit like arranged marriage. So we will manage to implement all the commitments. We will do what it has to be done, but there is not, so to speak, love and emotions into this from the, so to speak, positive side. And I think this is really important, to sell to the people, sell to the businesses that this is, so to speak, a next step after we get independence. And then it comes to energy. The next step is actually to grow on this notion and provide energy efficient, CO2, zero emission, and many other products and services that would be, again, treated as a good example, not only Europe, but in the rest of the world.
And if we turn to the issue that large firms are more successful in climate transition actions compared to small firms, and looking at the economy structure, we see a majority of small firms in the country. Do we have somehow to differentiate between small firms and large firms in the policy?
Well, as I said, I mean, if we want to do it by force, yes, we can discuss who has to get more pain, whether big or smaller companies. But if you turn this into more the opportunity, I think you will create this incentive for everyone to be on the same road to the green transition. Then it comes to the smaller business, of course, we have to understand that targets drive behavior, or why flamingos are pink, because they eat shrimps. So the smaller companies, if they're not energy efficient, that means that their clients are not demanding this, and they are not the ones who are, you know, giving this pink color or green color in this case.
Thank you. And now I'd like to turn the question about the climate changes and challenges to Mr. Krapčis and SEB Bank. Does your bank have a climate change strategy? And do you measure, and how do you measure performance against the strategy?
Yes, sure. Not to have a strategy that sort of tries to make sure we improve ourselves, and we also sort of try to push our clients to improve. That would be the same as like not having a good AML strategy a couple of years ago. And for us in Baltics, I think we have done a marvelous job in terms of improving situation with AML, and we sort of feel we did this quite fast. We are able to pull ourselves together and really do things quicker than so-called old Europe, and this is our next big agenda item. So, and I think this is clearly a top priority for us. And one thing what makes it even more important for us than perhaps for other European countries is that, well, we are small countries neighboring Russia. So, and of course, we do care also about the planet, don't get me wrong. And there is existential threat for the planet, and we deeply care about that, and we are deeply concerned about that. But more immediate existential threat for us is proximity to Russia, reliance on energy when it comes to Russia. And well, with events in Ukraine, I guess also it's a wake-up call for rest of Europe that we can't continue as if it's business as usual. And yeah, I'm also serving as a chairman of the board for SOS Children's Villages here in Latvia. And with one hand, we are doing whatever we can in order to help Ukrainian kids. But if we or our clients continue to pay to Russia so that there are more orphans coming out from Ukraine, then it's a bit schizophrenic, sorry to say. So again, with all due respect to long-term goals of green move and Green Deal, there are even more short-term imperatives for us to take it very seriously.
Okay, thank you. And now I would like to turn to the question about inflation. It's a lot of discussion about the rising inflation and the challenges that it is posing for different countries, and how these challenges are being addressed. We've seen IMF forecasting inflation between 10 and 13% across the Baltic region for 2022. Looking at the experience and position at SEB Latvia, how does this high inflation impact your business?
I think it's deeply worrying to see those numbers coming out, and what I mentioned also before, especially in Latvia, you can see that companies have not regained confidence after COVID, and then you have a next sort of also geopolitical threat, and on top of that, high inflation. So we really sort of see this in everyday business, that there would be companies that would be willing to open up a second manufacturing facility in Latvia, for example, but they just can't get construction company to calculate costs correctly. And there's little visibility for a year ahead and 2 years ahead. So when companies invest, they want to have some sort of visibility 10 years ahead. So, and if you can't get visibility 1 or 2 years ahead, that's definitely bad news. And also sort of just technically speaking, as a banker, when inflation is high, you update average cost of living. So loan affordability or loan availability suffers from that. And those private individuals, and there are many of such private individuals that don't see their salaries being increased as fast as inflation increases, they by definition, they become less capable to serve their loans or take out new loans. So it has a direct and immediate impact on our business and business of our clients.
Do you see impact of inflation and expectations of even rising inflation in Lithuania?
Well, I think the best indication was given already in the report, and I think the specific moment of inflation, this is yet doesn't make us super attractive as a region. hopefully, government and in collaboration with Lithuanian Bank will, make their best to mitigate this cost. But I think it's been already some time ago that us as a region and also as a Lithuania, for the investors, we do not sell ourselves as a cheap country, right? So inflation has never been, so to speak, a key decision criteria for investment into this region when it comes to FDIs. But if that goes, for a longer time, then the stability will be the question. And hopefully we won't be discussing about this next year time.
Now, should we link inflation with the climate challenges? Energy prices have gone up. Conventional energy is already very expensive. New technologies may help to decarbonize. However, there is a risk that they increase the cost as well. And we had even the term like green inflation. So are the firms concerned about greenflation? And how much are they concerned about that?
I think it's obvious that it's not just the cost, but then what you get out of this cost. And I think the productivity is the answer, right? And if we focus on our industries, especially those which are the biggest GDP contributors, that they keep on track with their transformation towards Industry 4.0, continuing with the digital transformation so that their productivity also rises, right? And if we come to the point where we can, offer unique things to the world, then it's not about the cost, it's about, the value you can offer. So talking about the greenwash, I don't think this is now spread like a virus, COVID-19, but it might be a risk in the future.
Thank you. And now I would like to ask Jonas Vanto, Invest Estonia, about Estonian firms and their development into the future investment activities and about future higher innovations. The investment survey shows that half of invested firms have developed their new investment activities. However, large firms were more than twice as likely that small firms to innovate. Is there a way to help small firms to bridge this innovation gap? Do you see this possibility?
Yes, and then the government and then our organization has made some steps towards that as well to help with the innovation, help companies to innovate their products, their services, etc. And just for example, we're planning right now to separate 100 million to a fund to specifically support green tech innovations. As we already told today, quite a lot of green turn. Then of course this is one of the main topics in the support from the government as well to the sector. And then a little bit smaller steps, but still quite helpful for companies, and especially smaller and then medium-sized companies is our especially like applied sciences focused research program, where companies can apply to the grant. The budget of the fund is 20 million, and their main focus is innovation and then working out new products in new sectors and then new innovative things. So definitely the government tries to help them, and well, it's a matter of competition. If the small and then medium size already are innovating and innovating quite fast in the help with the help of the government as well, then nothing else the big need to innovate after that as well, because they will be out of the competition quite soon in years to come. So it's some help from the government side as well.
Thank you. So fintech and digitalization have been major driving force of the economies during the late period. Firms report that the main short-term and long-term impact of the pandemic is the need for more digitalization. What have you observed from Lithuanian firms, and what are the priorities in terms of this digitalization?
Well, that's really a question to my heart and my mind, because I'm a big fan and believer of digitization. And I think we have witnessed a fantastic moment where basically companies pushed, the technology companies to the limit. Because in the past, before the pandemics, you would see so many offers, so many products, so many services, but the companies were not really understanding and not really adopting those technologies. But during the last, couple of years, all the companies jumped so close, to the technological edge that they were like really shocked, the technology companies, that they do not have, a meal for everyone. So, and I'm really excited that the Baltic countries take this very seriously. And this is a really strong driver, not only for the internal productivity increase, but also for getting the attention from the region. So, for example, just, a couple of years ago, myself, I was in Germany, where Lithuania was presented to the biggest manufacturers as a role model on how you can, do digitization in manufacturing industry. And I think those specific application, industrial application, that way you have the most of the benefits. Because in the past, technology were mainly seen as an end user, so to speak, playground. But what we see that this has helped also to break into where it makes the biggest impact. And and if you look to the companies independently on this region or anywhere else in the world, they all face exactly the same issues. Then it comes to the digital transformation. Number one is, having set it as a strategic initiative and then execute as a program. But then the second, readiness and willingness to make a transformation to the business models and business processes. And this is not that easy, because everyone would expect that you just install additional server, additional program, and well, all of a sudden your business is digital. No, it's not. It's analog as it used to be. It's going to be e-business, but it won't be, so to speak, a digital business. So I really liked the report that showed that these countries in the Baltics were above the EU average and expectations. And I think this is yet another good outcome out of the Baltic countries.
Thank you. Ms. Sandrine Croze, do you see differences between the Baltic countries and other Nordic region countries in this respect, in digitalization and also in addressing other major challenges?
Well, as evidenced by the study, actually the Baltics are, as mentioned before, are pretty well advanced as regards digitalization. What was striking to me when we were discussing the green transition, there the attitude of the economy is much more positive. So climate change is seen as an opportunity. And actually, when talking to our clients, then you get really the feeling that they are ready to rethink the type of products that they are offering, to rethink their supply chain. So they are, and to increase, they are increasing actually their research to be able to be the first movers in the market, because basically what this climate challenge means is that we will have to change the way we are doing things. And if you are able to develop a sustainable way of doing that, then maybe you will have a big advantage versus others who might be coming in later. The other aspect is that, of course, you have also new fields for activities which are opening. For example, I will give you the example of circular economy. So far, what we have witnessed is that everything which has to do with recycling, the industry is very much scattered. So you have very, very, very little economies of scale. Plus, Europe in general has a history of trying to get rid of its waste, even exporting back to Africa or to Asia some of, for example, all the electronic products, which is no longer a sustainable model for two reasons. First, because indeed the ambition in Europe is to reuse as much as possible. Plus, when you are looking at the supply chain issues that we have, actually it's a waste of raw materials. So what I see, for example, there are investments coming now to try to harvest this potential. And I see a much more proactive view on this in the Nordics versus in the Baltics, even if currently we are looking at some projects because some local companies have identified the issue and actually are coming to us and saying, okay, I have this business. I think now, for example, we have a wave of recycling of old wind farms coming up. There are raw materials which are very important to Europe and very valuable. We can then develop recycling facility and it will be real business. It's not just because it's nice, it's real business. So for me, I would like just to, then looking at energy, I think there, of course, Finland has had always a similar approach or cautious approach versus their neighbor. So there, I think they are very much similar. What was, for example, if I compare also with Poland, there you have also historically had an historical cautious and the aim of having, let's say, an independence in terms of energy. In the future, I think, of course, it will continue. What was very striking to me is how fast all the Baltics have reacted to the Ukraine crisis and have been able to take very quickly very firm decisions. This is also, we have seen, for example, at EIB, we have been financing in the past, for example, pipelines who had the objective to limit the dependency from Russian gas. Pipelines are no longer eligible to us because in the context of our climate policy, we are now out of fossil fuels. But let's say there has been a continuous policy over the last 10 years and more just to be prepared for that. What I also see, which is not so often, is, for example, we do have also projects from companies from the Baltics for renewables outside the Baltics. So you see, this is a new trend. And we welcome this very much because it shows then that now people have made up a strategy. They are ready to invest, not only where they know, let's say, the situation, the regulation best, but also to harvest the potential elsewhere. So, for example, last year we financed a wind farm in Poland, actually put in place by Ignitis Group. So these are the trends where I see, and this type of approach is more similar to what I see in the Nordics, where actually people are ready also to look beyond the boundaries to establish a broader footprint for their operations. But it's at the beginning.
Thank you. And one more question to you. From what we heard in the speech of Vice President Estrus, huge amounts of investments are announced. Economies proved to be resilient to pandemic crisis. Now probably we would expect their resilience to the war crisis and all the challenges related to it. But do we see risks? Can we say now what are the risks, major risks, or what major risk that is still here? Ms. Sandrine, short word from your side.
Okay, well, I think it has been already mentioned before, obviously energy prices, but what I see, but not only in the Baltics, generally, the supply chain risk is the most important one that we see for the moment, because it is massively impacting the accounts of the companies, in particular if they are not able to pass on the increased prices for example, for raw materials to the end customer. And this impacts not only the profitability, because maybe they have a good order book, but if this order book becomes loss-making, then it's an issue. And it impacts also their needs for working capital, because, for example, they have to have higher stocks. They have, and the value of these stocks has increased, and also it might take them more time to deliver a certain project. So the time for them, to get the money back to the company might increase as well. So this is, in my view, the most serious challenge now.
We have seen lately turmoil in the financial markets, and I would like to ask Mr. Danevich about financial risks that you see from SEB Latvia side. What could you mention here?
I would say very briefly, of course, the most obvious risk for us, at least from Western perception, is our neighbor, Russia. And in my discussions with my foreign colleagues and stakeholders, I feel now the perceived risk level is higher than I would describe an actual risk level. For us living in Baltics, I guess Crimea was the last wake-up call, and I think we then felt that the Westerners are perceiving threat on Baltics on a lower level than it actually is. And we know Russia would surprise us negatively. We only didn't know whether it would take place in Ukraine or in Baltics, frankly speaking. So now I would say to my Western friends, definitely you perceive this risk as higher than it should be. And the actual risk there is way lower with all the engagement from Western Europe, from NATO, from US and all that. So, and that risk aside, I would say, well, inflation, cyber threats, that is something we are worried about. And also, yeah, this sort of lack of self-confidence and willingness to invest, in particular for Latvian companies that have fantastically low leverage and great balance sheets, I would say sometimes the only thing they need to fear is fear itself, just to quote one former US president. So it's also this lack of self-confidence and what you can see from behavioral economics that affects us more than the reality itself. Thank you.
Thank you. We have touched upon a number of aspects of this difficult period of crisis, doubling crisis coming from from pandemic, from climate changes, and also from the war. But it would be important to finalize on an optimistic note. Can we say at least one sentence, one point, each of us, about your personal optimistic view? Is there basis for this optimism, and where is it? I would like to start from Elias Chivilis. What would be your optimistic view?
Well, one sentence that's really, really little, to express the emotions that I think we have in the streets. And if you would allow me to be a little bit longer, I would start, with the fact that yes, we had those black swans flying over as never before. We had those crises we haven't mentioned, but in Lithuania we had yet another in trade with China, another black swan. And all of those, revealed to me one interesting fact, that we really do have resilience. And in the past, we've been naming this region as a Baltic tiger, but this Baltic tiger is rather jumping as a frog really high and really far. We jumped really high and really far on digitization. We jumped really high and really far then it comes to, yes, adopting energy independence. Now the green transformation, society transformation, then it comes to new digital skills and accepting the new ways of working. So I really think that this is proved to us many times that we as the Baltics, we are not, so to speak, a side region, but we are rather the ones who can inspire and also, show good examples. So I really want us, to believe in ourselves, that we've proved to ourselves and now also to the rest of the world that we have our strengths and uniqueness that we can really play in the future. And even if that future is unknown, uncertain, but if we keep on being ourselves, we are well prepared for it.
Thank you. And Ms. Sandrine Crozet, what is the basis for optimism for you?
I think it's indeed adaptability. I think over the last 3 years, we have faced so many challenges. Every time it seemed to be like, okay, that's the end. And actually, it's not the end. And even a very positive outcome generally, despite, many challenges, because it's not all roses and happiness, of course not. But we are still there and we are standing.
Jonas Vanto, one sentence about optimistic approach from your side.
Yes, of course. One sentence is difficult, but I try to manage. I like the sentence that fear itself is the biggest like threat to us, and I see that as Europe and then the whole world is quite mutual and working like in a team towards Russia and helping Ukraine. I think that's a good sign already. But as our minister yesterday said as well, that actually in Estonia and definitely in the Baltics as well, it's actually a really good time to invest right now because Finland and Sweden is joining NATO. We of course are NATO. We are in European Union. We have euro. We have a stable economies and good taxation systems. The green turn will come. We're quite innovative and also digitalization is in a good place as well. So I think we have a lot of optimistic and positive criteria and then the messages to say, and then I think we're all welcoming FDI to the region as well.
So thank you very much for the panel members for joining us and for sharing your opinions on the critical matters and also sharing your optimistic approach. Thank you very much.
Thank you very much.
Thank you. Thank you.
So, thank you very much. And we come at the end of a very interesting morning in which we started the discussion looking at the impact of the pandemic on the region. We have been discussing the new challenge coming up with the impact of the war, and we end up with some positive notes in terms of opportunities for investment in the region. I think it has been really instructive to look at how policy was capable to pass through the pandemic and leave a good ground for transformation of the economy during the pandemic. And also we are discussing how the new situation is leading on the one side to refocus on energy security, but also to try to catch the transformation related to the green transition and to look at investment opportunities in the public sector point of view, but also in the private sector point of view. We heard some call on managing the situation, managing the transformation, and really looking behind and looking at the transformation going forward. With that, it's a difficult time, uncertainty is huge, and the challenge of the war are huge. But we wanted to end up in a positive note, looking behind and looking at new opportunities coming up. The European Commission just came up with the Repower Europe strategy that will have a strong implication in terms of a new direction, also in terms of the energy market, and that's one area of action. Still looking, we were discussing about the labor market skills and retraining as important areas for new investment and focus at the regional level, and still the innovation side, where we see innovation on the one part, but also the digitalization and the advancement in digitalization that are so important in the region, where we see some areas of excellence, but also some areas lagging behind. With that, and with a positive note on looking behind and looking at the opportunity, I have the pleasure to close this discussion. Before closing, I wanted to thank all the staff of the 3 central banks and colleagues from the European Investment Bank for the excellent cooperation for the organization of this event, all panelists, speakers, and all the audience that has been with us this morning in participating to this debate. We at the European Investment Bank were very hopeful of transforming this event into a regular event. We already had before some discussion with Governor Simkus that also was very much looking forward more discussion like this to come. So I hope this is just a goodbye to next year, and that we can continue having another discussion and maybe possibly looking at whether we are catching the opportunities coming up. Thank you very much, and goodbye to everybody.